Welcome to Las Vegas Real Estate Now, where we believe in the 3 E's: educate, empower, and engage. I'm your host, Harvey Blankfeld of the Brown Blankfeld Group, selling homes in Southern Nevada since 1988. We are very proud to be part of the Real Estate Radio Network. Like them, we are dedicated to delivering timely, balanced truths about local market conditions. We not only share our experience and knowledge, but that of our expert contributors. With us in studio right now, we have Bill Nelson from Piercy, Bowler, Taylor & Kern. He's been with that firm for 22 years. Welcome to the show.
Thank you for having me.
One thing that comes up now is the idea of buying commercial property for your business. And a lot of people don't even venture out there. But you really can, but there's diligence to be done.
There is. We can look at some of the underlying documents relating to that building, rent rolls. Mm-hmm. And we can test those rent rolls. Are the tenants really tenants?
Are they really paying that much?
And how long do the contracts go out? That greatly contributes to the value of the property.
No one would falsely represent that they're getting more money than they really are.
Of course not. Nobody'd ever do that. They could also falsely represent that there are some open offices that really aren't open, so they could be collecting some rent under the table.
Gotcha.
You'll physically go to the place.
Absolutely.
Yeah.
And see if those places are really vacant.
It's not something you normally associate with an accountant, but that's what you guys do.
We'll look to see if the value has been impaired, not for tax purposes,
right,
but for financial statement purposes. The term used in our literature is non-temporary reduction in the value.
You guys could shorten the term a little bit.
But whoever wrote the language decided non-temporary
was the IRS, no doubt.
Somebody somewhere that doesn't deal with real people very much, probably. What it means is if the return on the investment isn't quite there enough to cover the cost of the investment in the building, for example, then it needs to be written down or impaired. And if that's happened, that's a flag that we need to look and see if the value that's being placed on the building is legitimate or not.
What if it's not a building? What if we're just looking to buy a business?
Very similar. We'll look at the financial statements of the companies being sold. We test the assets to see if they're real. Not only for products that were sold, but are they collectible? How old are they? We'll do what's called a cutoff test, and we'll see if those receivables relate to the period that's being tested or not. We'll look at equipment. I have a great story. We were doing a test, and there was a piece of equipment called forklift.
I've heard of it.
Hey, you know what? I've never seen a forklift out here. Where is it? Got in the car, went down to Lake Mead, to the slip, and the boat named forklift.
Oh, that's funny.
It was something that was on the books that shouldn't have been. It can be, but it's not a piece of equipment used in a business.
If I'm taking the employees out one week, but I'm taking the kids out the next week, what happens then?
Well, the asset can be part business and part personal.
Okay.
So maybe the full asset is on the books, but only part of it's depreciable.
What about these liabilities there, too, though, Bill?
That's what we do every day, is we test for existence and, more importantly, completeness of liabilities.
Right.
We'll look for liabilities that haven't been paid yet.
How far back should you go?
At least 3 years to look for trends.
If they're going to tamper or play with assets and they're going to tamper and play with liabilities, that might tamper and play with a calendar. Maybe the sales that were in the last quarter of 13 got thrown into 14 to make it look better.
Another thing that we test, journal entries. And we really look at entries made right before year end, right after year end.
Sure.
We frequently test inventory. We'll test the invoices to see if
what they paid for it.
Right, and if it's being valued properly or not.
Well, Bill, thanks so much for coming in.
Thanks for having me.
Thanks for listening to Las Vegas Real Estate Now. Please tune in every week and help us heal the Southern Nevada market one home at a time.